This is Nightly Business Report with Sue Herrera and Bill Griffin.
Land of confusion. President Trump says a deal with China is possible, but so are new tariffs. And that resulted in a volatile session for stocks.
Geopolitical rumblings from Iran to Venezuela to North Korea. The number of hotspots on Wall Street's radar is growing.
Taking off. If you plan on flying somewhere this summer, get ready to open your wallet even wider. Those stories and more tonight on Nightly Business Report for this Thursday, May the 9th.
Good evening, everyone, and welcome. Investors spent the day trying to figure out whether there will be a trade deal with China. Negotiations between the two countries are at a critical juncture, with new tariffs on Chinese goods set to go into effect at midnight. President Trump earlier today indicated that maybe there won't be a deal, and stocks fell sharply. Then there were signals that something might happen, and stocks pared their losses. When all was said and done, the Dow Jones Industrial Average fell 138 points to 25,828, but it had been down more than 400 points. The Nasdaq slid 32, and the S&P 500 was down 8. Bob Pisani explains why the market is moving on every trade headline.
Stocks went on another roller coaster ride today, with the Dow tumbling about 450 points at session lows before rebounding well off the lows. The clock's ticking on a trade deal as the 11th hour approaches. Markets initially tanked on fears that trade rhetoric was ramping up on both sides after President Donald Trump said that China broke the trade deal they had in place at a rally last night. But the S&P rebounded quickly once Trump said he had received a beautiful letter, those are his words, from Chinese President Xi Jinping. And semis and industrials, which initially tumbled on trade fears, all bounced back on those comments. Those semis were still weighed down by weakness in Intel, and Caterpillar's bounce was fairly modest at best. Here's the bottom line. The street's having a very tough time gaming the outcome of all these trade talks. And the hope is that at this point, if there is no trade deal, at least tariffs will not increase while negotiations continue. We've been saying all week that a complete breakdown in trade talks with new tariffs in place for months would cause major problems for the markets, and that could easily drop the S&P into the $2,600 range. Turns out UBS agrees with that. In a report out yesterday, UBS said a complete breakdown in trade talks could result in U.S. stocks dropping 10 to 15%. That's exactly the 2,600 area, with China stocks dropping even more, down 15 to 20%. For the moment, the market is still acting like the most likely outcome may not be an all-out trade war and not a clear trade deal. It's the middle ground. No trade deal, but no increase in tariffs as negotiations continue. We'll see if that's the outcome. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And the Chinese trade delegation is in Washington tonight for the resumption of those negotiations. Early word out of Beijing was that they plan to play hardball. But President Trump today wasn't tipping his hand about the U.S. strategy. Kayla Tausche reports.
Talks with China reopened tonight after a dispute over the deal language has become public and vitriolic. President Trump is leaving his options open, praising Chinese leadership but scolding them for backing off their commitments.
I have no idea what's going to happen. I did get last night a very beautiful letter from President Xi. Let's work together. Let's see if we can get something done. But they renegotiated the deal.
Trump is moving to squeeze China even further, hiking tariffs on $200 billion in Chinese goods from 10% to 25%, effective at 12:01 a.m., and threatening the rest of China's imports too.
It'll be $325 billion at 25%, and we're starting that paperwork today.
Trade isn't the only area the Trump administration is ramping up pressure. The Federal Communications Commission today denied China Mobile a license to do business in the U.S. and is looking at revoking licenses already granted to other Chinese-owned carriers.
The security of our next generation networks cannot be an afterthought. It has to be a top-level priority now.
As talks continue, tensions simmer. This round could prove to be a breakthrough or a breakup of the world's two biggest economic powers battling over trade. For Nightly Business Report, I'm Kayla Tausche in Washington.
So what happens to the markets if we do get a trade deal with China, and what happens if we don't? Joining us to discuss this is Art Hogan, Chief Market Strategist with National Securities. Welcome back, Art. Good to see you.
Hey, Sue. Good to see you.
What are your expectations, and what do you think the market reaction will be if indeed you are correct?
I think there's three scenarios. I think one is the worst case scenario, and that's where we get nothing done and we walk away, stop negotiating, escalate to the max on all $563 billion, 25%. And they retaliate with, whatever they can throw at it. And I think the market really suffers in that situation. But I think more so the global economy suffers. I think the best case scenario is we find out over the weekend we've got a beautiful deal. I don't think either one of those is going to happen. I think somewhere in the middle where we actually say, hey, conversations are continuing to be constructive. We're going to wait 2 weeks before we increase tariffs and hopefully, iron out the things that are the bumps in the road this week. That's our base case. We hope that happens. But, any one of those three things could happen.
Art, most of the viewers of this program are long-term investors. How should they view what's going on right now?
I think they should look at their plans and say, I've got a good plan in place. This is probably exactly what I should be doing, sticking to my plan. Now, there is a case where you say, this kind of volatility makes me nervous. Right. It keeps me up at night. And then perhaps I should change my plan. Instead of having 70% in equities, I should have 60%. But stick to your plan. Don't let news like this or any of the other things that become that sort of disaster of the week alter you from your long-term plans.
If indeed they are uncomfortable with their exposure to equities, where would you recommend they reallocate?
Well, I think the most defensive thing right now, in my mind, is raising some cash, having a higher allocation of cash. I only say that, Sue, because I think a lot of the defensive areas that we typically run to, like utilities and staples and things of that, sort of yield co-type companies, are getting expensive. And I don't think, they're trading at high multiples and not throwing off very high yields. So I'd rather you say, okay, for the time being, I'm going to spend until the end of this year with, instead of having 10% cash, having 15% cash. I think that's as defensive as anything right now.
We may be getting a little ahead of ourselves here, but let's assume that the tariffs do go into place, not only for the Chinese imports, but China retaliates with some of their own. That's inflationary. How does the Fed respond to that, do you think?
Yeah, and Bill, that's a great question because it's the wrong kind of inflation. There's no economic benefit for those prices going up, right? Those are fixed prices, not driven by supply and demand. The Fed's going to have to take a step back and say, well, how do we react to this and see how much of that bleeds through? Sometimes that leads to higher input costs, but a lot of times what really happens when you fix costs is it drags down economic activity. So in both situations, the Fed's in a pickle because they'd like to stimulate economic activity, but they might start staring down the barrel of higher than expected inflation. It puts everybody in a difficult situation. It's the wrong kind of inflation.
Yep, it sure is. Okay, Art, thank you so much. Art Hogan with National Securities.
Now, we've been talking a lot this week about the various sectors that could be adversely affected by a rise in tariffs. Well, here's an unexpected industry that's feeling the heat. Bicycle makers. Ylan Mui is in Manning, South Carolina for us tonight.
Roughly 1,000 bikes a day roll off the assembly lines here at Bicycle Corporation of America. Workers spray the aluminum frames with special powdery paint, lace the spokes of the rubber wheels, attach the pedals and handlebars. All of those pieces, most of them come from China.
Everything from the handlebars, the fork, frame, pedals, basically 100% of the components that you're seeing right now are all from China.
These bikes got hit with a 10% tariff when the trade war between President Trump and China started last year. On Friday, that number could go up to 25%. Arnold Kamler, CEO of parent company Kent International, said it would be a direct blow to his bottom line.
We've had no choice but to pass these costs on to our customers, and then the customers had to pass it on to consumers.
And you've got a lot of boxes here.
Yeah, we actually have a surplus of inventory right now because
the factory has been stockpiling parts in case the tariffs go up. But already, they've cost the company about $16 million. And that translates into money out of your wallet. A bike that used to sell for $150 at a retailer like Walmart now goes for $170.
We're an American company. We don't know how we perceive that China is paying for this. We're paying for it.
The factory has also hit the brakes on plans to expand. Kamler wants the White House to know that's at least 70 new jobs here in South Carolina that will simply vanish.
We believe in American production. We believe in the American worker. We believe in the technology. But please be patient, stop the threats, and please work and negotiate with China.
At this factory, American jobs are riding on a deal. For Nightly Business Report, I'm Ylan Mui in Manning, South Carolina.
Oil prices declined today on those heightened trade tensions between the world's two largest economies. The concern is that an all-out trade war could dent global demand for oil. Today, domestic crude settled above $61 a barrel.
Now, the global markets have understandably been focusing on these U.S.-China trade talks lately, but there are other geopolitical hotspots that could have a big financial impact as well. We're talking about issues involving North Korea, Iran, Venezuela. Joining us right now to talk about that, Chris Constantinos is Chief Investment Strategist with Riverfront Investment Group. Chris, good to see you again. Welcome back.
Likewise, thank you.
And just today, Secretary of State Mike Pompeo was talking about Iran and the threats that have been coming out of that country. Are you as concerned about some of those potential hotspots, or are we just talking about some saber rattling right now?
Well, look, from a humanitarian perspective, obviously places like Iran and Venezuela, these are tremendously terrible humanitarian crises. However, from the global market perspective, from the perspective of all of us trying to figure out what's going to happen to stock markets in the future, really the only way these countries matter is through a transmission mechanism in the price of oil. And the issue for these countries is that, or any OPEC country actually, is that OPEC's ability to drive pricing and drive supply and demand is diminished in recent years because of Western technology gains. So I view places like Venezuela and Iran as being increasingly irrelevant to stock markets going forward. And generally speaking, stock markets tend to look through these types of geopolitical affairs, except in the very, very near-term impact on a valuation multiple.
But what about North Korea? News that they have fired short-range missiles, and this evening say that they intend to continue to do that. Certainly, that could have, China's going to have a reaction to that. The U.S. has already made some statements on it. Does that threaten to derail these talks, the trade talks at this point, or no?
That's a really interesting question. I believe that neither China nor the U.S. want any more complexity in these talks than what already exists, and the advent of North Korea acting up again, I think, is an unwanted complexity for both sides. I think if you take a step back, this is very much in keeping with North Korean behavior. Yes, we haven't had a missile launch in about 500 days, but this is pretty much straight out of the North Korean playbook. It, to me, looks like North Korean saber rattling. They're probably a little bit upset that the talks in Hanoi a few months back didn't really yield any results, and that the U.S. administration walked away. So this is just, I think, them saying, hey, remember us? We're still out there. Yeah. But I'd like to think that the U.S. and China are focused on the trade deal right now, because I think that's of utmost importance to both countries' economies.
And we will see what happens tonight and over the weekend. Chris Constantinos with Riverfront Investment Group. Again, thanks for joining us tonight.
My pleasure.
Some new reports tonight on the U.S. economy. We start with inflation, which the Fed has been focused on, of course. Producer prices rose modestly in April, up 0.2%, which was in line with expectations. Economists say inflation pressures at the factory level appear to be picking up. A separate report on the job market shows the number of Americans filing for unemployment benefits fell 2,000, a sign that the labor market remains robust.
Time to take a look at some of today's upgrades and downgrades. We begin with Dow component Intel. The rating on that one was cut to market perform from outperform at BMO Capital Markets. The analysts there cited competition from Advanced Micro Devices, or AMD, which has been gaining market share lately. Price target on Intel now $50. That stock fell 5% to $46.62. Ralph Lauren was upgraded to outperform from sector perform at RBC Capital. The analyst cited the prospects for gross margin improvement. Price target, $145. That stock rose 1% to $125.68.
And also at RBC Capital, shares of American Eagle were downgraded to sector perform from outperform. The analyst says growth prospects for its Aries brand are priced into that stock, and the price target is now $24. The stock fell 2% to $22.45. Abercrombie & Fitch was downgraded to underperform from neutral over at Wedbush. The analyst cites concerns that promotions may be increasing. The price target is $23. The stock fell 2.5% to $28.46.
Still ahead, Uber is expected to start trading on the New York Stock Exchange tomorrow. Tonight, we look at its hefty losses and how it burns through billions. Facebook's co-founder is calling for a breakup of the company. In a New York Times op-ed piece this morning, Chris Hughes wrote that CEO Mark Zuckerberg has what he called unchecked power and influence far beyond that of anyone in the private sector or in government. He wrote that it was time for regulators to step in. And today, Connecticut Senator Richard Blumenthal said he agrees.
I think that Facebook needs to be broken up. The acquisitions of Instagram and WhatsApp need to be unwound. And there needs to be Department of Justice scrutiny about appropriate antitrust remedies. And let's remember, being big is not illegal. It's the misuse of that bigness.
Zuckerberg today rejected calls for a breakup, and according to the company, he's meeting with government leaders this week. By the way, Chris Hughes has not worked for Facebook in more than a decade. He says he liquidated his holdings 7 years ago. That stock fell a fraction in today's session.
Uber has priced its initial public offering at $45 per share. That was at the lower end of its target range. Shares are expected to start trading on the New York Stock Exchange tomorrow. One of the big concerns for investors is trying to figure out when Uber will turn a profit. But for now, we know how Uber loses money, and a lot of it. Deirdre Bosa explains.
Uber is a classic two-sided marketplace. It connects drivers to riders through its app. For each ride, a portion goes to the driver and the rest goes to Uber. But since its inception, Uber's costs have far outweighed the revenue it brings in. There's taxes, payment fees, insurance, driver and rider incentives, and other operating costs. In 2018, Uber actually lost $1.8 billion. In the 2 years prior, it burned through nearly $5 billion. Uber is also pouring money into expansion across the globe, though it sold its Russia, Southeast Asia, and China businesses to cut costs in regions where they faced intense local competition. And it's investing in moonshot projects like e-bikes and scooters, self-driving cars, trucking, even flying taxis. Ultimately, Uber wants a piece of every passenger and public transportation mile traveled globally, what it calls a $5.7 trillion market opportunity.
For a Nightly Business Report, I'm Deirdre Bosa.
Kate Spade gives Tapestry investors a much-needed shot in the arm, and that's where we begin tonight's market focus. Tapestry did beat Wall Street estimates as it sold more Coach and Kate Spade handbags. The handbag and accessories maker also authorized a $1 billion buyback, which may be a move to calm investors' concerns after a weak holiday quarter. And it did that today. Shares were up nearly 9% to $33.36. Chevron is walking away from its bid to buy Anadarko, leaving Occidental Petroleum as the winning bidder. Chevron will now collect a $1 billion breakup fee and increase its buyback program by 25% to $5 billion. Chevron shares rose about 3% today to $121.19, while both Occidental and Anadarko stocks were down. Norwegian Cruise Line said today that strong global demand and record bookings helped that company post better than expected results. Norwegian also raised its quarterly and full year guidance, and the stock today was up a fraction to $57.59.
Keurig Dr. Pepper reported better than expected earnings, but revenue came in just short of estimates. The beverage maker did reaffirm its full year targets. Today, the stock was down nearly 3% to $28.28. Hain Celestial, the maker of Celestial Seasonings tea and Terra chips, reported a quarterly loss that was narrower than Wall Street was expecting. The company is also selling its poultry business as it focuses on its core profitable brands. It's the second unit sale this week for Hain. Shares were down nearly 3.5% to $22.92. Stamps.com slashed its full-year earnings and revenue forecast and sees further declines in 2020 and 2021. The reason? Uncertain contract changes that its partners have with the U.S. Postal Service. Last quarter, Stamps.com said it was ending its partnership with the Postal Service. Today, the stock lost half of its value, closing at $36.90. After the bell, Wynn Resorts beat analysts' earnings expectations but missed their revenue target. The casino company saw a decrease in revenue from its Macau operations, and that pressured the stock in initial after-hours trading. It finished the regular session up just a fraction to $136.33.
Now to the nation's opioid drug epidemic. A new report today offered some hope in the fight to curb abuse. Meg Terrell has more.
The numbers on the opioid epidemic are staggering. Over 2 decades, almost 400,000 people died in the United States from an overdose of the drugs. But new data today from health researcher IQVIA show progress in at least one area. The volume of prescribed opioid painkillers last year declined by a record 17%, to the equivalent of about 34 pills per American adult. The data show opioid prescriptions peaked in 2011 at about 72 pills per adult. The decline was largely driven by fewer high-dose prescriptions, which are associated with a greater risk of addiction and overdose.
There's an overall much greater level of awareness of some of the risks of prescribing opioids. And there have been restrictions put in place really across the board to try to reduce particularly the use of the high-dose prescriptions.
The study also shows an uptake in medication-assisted treatment for opioid addiction, something researchers say is key for making a dent in the epidemic. But progress is uneven across states.
We found that certainly in the New England states, there's very high use of medication-assisted therapies. Maine and Vermont in particular are really using those medication-assisted therapies.
As the epidemic has evolved, more opioid overdose deaths have been driven by use of illicit drugs like fentanyl. But public health officials say curbing use of prescription opioids is still an important step.
If you look at the rates of new addiction, so historically the people who became newly addicted to opioids became addicted through a lawful prescription. A lot of the new addiction was from medical prescribing. More and more of the new addiction are actually people whose first exposure is going to be an illicit drug. So the nature of the crisis is evolving.
And while the news today is encouraging, researchers say it's important to view it in context of the ongoing epidemic.
We are doing better than a few years ago. Still, there's a long way to go. We have much higher use than in other countries. We still have very high overdose rates. So we shouldn't take this as everything is done. Maybe the worst years of the epidemic are over.
As Health Secretary Alex Azar put it recently, the country is far from the end of the epidemic, but it's perhaps at the end of the beginning. For Nightly Business Report, I'm Meg Terrell.
Coming up, are you planning a summer getaway? Well, it may cost you. Here's some unwelcome news just as millions of Americans start planning their summer vacations. For the first time since late last year, domestic airfares in the U.S. are going up. Phil LeBeau takes a look at how much more you'll have to pay to fly this summer.
If you're booking a trip in the U.S. this summer, get ready to pay more. Airlines have raised fares $5 each way on most flights in the U.S., the first industry-wide fare hike of the year.
We've seen prices increasing since April, and we expect them to continue increasing until about mid-June, end of June, and then they'll slowly fall back down until the early fall.
With a typical domestic round-trip ticket going for just under $230, the average airfare today is still far lower than a few years ago, partially because ultra-low-cost airlines like Spirit have added more routes and flights. So traditional airlines have responded by offering more low-priced basic economy fares. And overall, the industry has steadily added more flights, and that is holding down fares. The big question is what impact, if any, will be felt by American, United, and Southwest parking more than 70 Boeing 737 MAX airplanes, forcing them to adjust their schedules.
So what we're seeing them do is shift capacity to their highest demand routes and cut back or cancel routes in the short term that are lower demand.
Which means airfares on high demand routes like LA to New York may not go up much. But on a route like Pittsburgh to LA, flights may be trimmed because there's not as much demand. So fares there could go up. Overall, airfares remain relatively low. But passengers are finding they're paying more for certain parts of their trip, like checking bags. In the last year, many airlines have raised the cost of checking a bag from $25 to $30. Phil LeBeau, Nightly Business Report, Chicago.
And finally tonight, we all make mistakes. Some are just more public than others. That's what happened in Australia, where the country's central bank put into circulation 46 million new $50 notes. One catch: the word responsibility was misspelled 3 times on each note. Needless to say, it sparked some reaction down under.
It's a huge mistake, and I mean an absolute huge mistake. It's not rare because they've minted them all with this mistake.
You could say it could be very irresponsible.
I think it's sad that people can't spell properly anymore. Or don't they have anyone checking it?
They're still worth $50. That's all that matters.
Yes, indeed. Well, the Reserve Bank of Australia says the spelling error will be corrected at the next print run later this year. It could be a collectible, I guess.
I was just going to say,
Yes.
could be a collectible. Before we go, here's a look at the final numbers from Wall Street. The Dow fell 138 points. It had been down more than 400. The Nasdaq slid 32, and the S&P 500 was down 8. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Remember, there's no A in responsibility. Have a great evening. We'll see you tomorrow.